At Nemarian Capital, we bring you the latest stock news each day. Please like and subscribe so we can bring these articles to you each day. Thank you.
Today, January 17, 2023, 10 things to know as Mullen issues delayed 10K. Mullen stockholders have a lot of new information to digest. Mullen Automotive filed its Form 10K before the 5:30 p.m. deadline last Friday. The company reported a net loss of $740.32 million and $0 of revenue. Shares of Mullen stock are down by more than 10%. Shares of the Mullen Automotive, NASDAQ MULN, opened in the red after the electric vehicle company filed its Form 10K before the 5:30 p.m. deadline last Friday. On that day, Mullen stock plummeted as much as 30% lower before recovering some losses. The Form 10K offered new information about the fiscal year ending September 30th. For the fiscal year, Mullen reported a net loss of $740.32 million and $0 of revenue. The initial recognition of warrant liabilities contributed $484.42 towards the net loss, while the reevaluation of warrant liabilities contributed $122.8 million. In fiscal year 2021, Mullen reported a net loss of $44.24 million and $0 of revenue. Furthermore, the company spent $21.65 million on research and development compared to just $3 million the prior year. Mullen filed a Form 8K prior to its Form 10K. The Form 8K disclosed two putative stockholder class action lawsuits, filed on December 7 and 13. The plaintiffs in the two cases argue that common stock outstanding as of the annual meeting record date was 477.51 million. As a result, a majority of the common stock, when considered separately, did not vote in favor of an increase in authorized shares at the 2022 annual meeting, which fell on July 26. With that in mind, let's take a look at 10 things to know about Mullen's Form 10K. 10 things to know as Mullen issues late 10K. 1. Mullen stated that it ended fiscal year 2022 with $289,000 in refundable deposits. The cost to reserve a Mullen 5 is $100, so investors can assume that they have 2,890 pre-orders. 2. The company mentioned pre-orders for the 5 had quadrupled on the second day of its strikingly different tour. 3. As a result, we can assume Mullen has at least 11,560 pre-orders for the 5. 4. Mullen had $302.59 million of total assets for the year ended September 30th. 5. $92.83 million of those assets are attributed to goodwill, which is an intangible asset. 6. The company warned, there is substantial doubt about our ability to continue as a going concern. 7. Mullen's ability to continue as a going concern will rely on additional debt or equity raises. That could mean further shareholder dilution. 8. On January 13, the company entered into an agreement with shareholders of its Series C preferred stock. These shareholders agreed to waive their right to receive any and all cumulative 15% per annum fixed dividends. 9. CEO David Michery received $6.37 million in compensation. 10. He received an additional CEO Performance Award of 107.9 million shares with a value of $30.07 million. Dear Mullen stock fans, brace yourself for a reverse stock split. A price increase on paper may raise big questions about viability. Shares of EV upstart Mullen Automotive fell sharply on Tuesday. Stakeholders grew jittery ahead of a possible approval for a reverse stock split. While a split theoretically keeps Mullen stock in the game, it also raises viability questions. After soaring above the January clouds, embattled but simultaneously exhilarating electric vehicle upstart Mullen Automotive unceremoniously plummeted on Tuesday following yesterday's holiday break. Jitters surround an upcoming special meeting that will occur later this week on January 19. At the center of the controversy stands Mullen's proposal for a reverse stock split. Mullen stock gapped down over 12%, slipping to below 15% at the time of writing. As Investor Place contributor Dana Blankenhorn mentioned, Mullen attempted to secure approval for a reverse split on December 23. However, this effort failed for lack of a quorum. Most shares that were voted supported the proposal, but the vast majority abstained, Blankenhorn wrote. In particular, the upcoming attempt to reverse split Mullen stock carries enormous implications. Essentially, Mullen has barring approval for a 180-day extension, until March 6 to get its share price above $1 or face delisting from the Nasdaq exchange. Obviously, a delisting carries multiple consequences, including visibility concerns and challenges associated with selling the impacted securities. Moreover, as Investor Place writer William White stated, the meeting will also involve 2 putative stockholder class actions filed against the company in December. The complaints focus on the increase in outstanding shares that materialized during the July 26, 2022, annual shareholder meeting. According to these plaintiffs, wrote White, a majority of shareholders did not vote in favor of the share increase. This has it intending to ratify the 2022 certificate amendment with the Delaware Court of Chancery filing. The date for a hearing covering this is January 23, 2023. Mullen stock faces big risks with a reverse split. By itself, a security split doesn't carry a moral trajectory, it's neither good nor bad. At the end of the day, the total value held among individual stakeholders of Mullen stock will remain the same. However, it's the forward implications that may end up hurting Mullen. If the market at large perceives Mullen as only engaging in a reverse split to cynically stay on board the Nasdaq while simultaneously papering over its fiscal deficiencies, the end result could be unfavorable. To be fair, the U.S. Securities and Exchange Commission recognizes that companies engage in reverse splits to raise visibility or to comply with an exchange's minimum price requirement. However, the Financial Industry Regulatory Authority also states that reverse stock splits are less common among seasoned companies that trade on one of the major U.S. stock exchanges. Further, FINRA warns that if a reverse split is announced and actually occurs, proceed with caution. Reverse splits tend to go hand in hand with low-priced, high-risk stocks. This is especially true with reverse splits that result in a post-split share price that is many times the price of the stock's current price. Frankly, FINRA's description of low price and high risk aptly describes Mullen stock, thus raising concerns among conservative investors. Why it matters? Although a potential reverse split seemingly bodes ominously for Mullen stock, it may not be the end of the road. For instance, Financial mentioned that in 2011, Citigroup initiated a reverse split to get its share price out of penny stock territory. Notably, C shares traded hands for around $80 prior to the coronavirus pandemic. However, Blankenhorn also warned in another Investor Place article that Mullen is short on cash and big on promises. Therefore, it's imperative that investors remain vigilant regarding exposure to Mullen stock.
Thanks for watching Numerian Capital News. Please come back tomorrow for another stock news update. Thank you.